What's up everyone, Humble Farmer Taiki here. Today I want to go over 3 ways I'm earning yield with $500,000 worth of stablecoins on chain. So let's get right into it. The first farm I'm in is on Arbitrum for an application called Euler. I currently have $100,000 in this farm, paying me 15% APY. Right? Let me farm those gains. Let me get those gains. The second farm, also on Arbitrum, is on Morpho. I have 150K in here, paying me roughly 10.68%. A little bit less, but I'll talk about why I'm in it. Let me farm that. Right? So pretty good yields for very little risk. So the first question is, where does the yield come from? Right? That's what everyone should be asking. And this, where it comes from is from this. Arbitrum just announced this DeFi Renaissance Incentive Program, or DRIP, where essentially they're going to be incentivizing people to borrow and lend stablecoins and Ethereum in order to receive these Arbitrum gains. It does say, if you go here, it does say that this thing, right? It only lasts 2 weeks. It ends September 17th. But if you actually read this announcement, it says that this thing is going to go on for 20 weeks, so 10 2-week epochs. So you might have to move your stablecoins or ETH around here and there to collect these gains, but these should be fairly sustainable for the next 4 to 5 months. So how does this work? So if you go to arbitrumdrip.com, you see, okay, step 1, bridge funds to Arbitrum. Cool. Step 2, select an opportunity. Step 3, claim your rewards. Seems simple enough. So if you go to the opportunities tab up here, it kind of goes over, some of the opportunities, obviously. And, you can select, what the fuck is going on? Okay, how about dashboard? No, protocols, opportunities. Okay, it works this time. So, it kind of goes over some of these. So, of course, these things are going to get diluted, right? But let me go over why I think Euler and Morpho is interesting. So, yeah, supply USDC to the Euler Earn EE-USDC vault. Seems simple enough. All you have to do is put money in here and then have these, rewards, slowly drip towards your wallet. And you can already see that, these rates are, probably going to normalize around 10% probably. But hey, for, pretty low risk, and I know where the yield comes from. It seems fairly simple. And the rewards, it's distributed via Merkle, which essentially means that every 8 to 12 hours, they're going to figure out how much percent of the share you're going to get for the the Arbitrum tokens, and then it'll be in your wallet. So the second one I want to talk about is Morpho. So why do I have more money in here when the yields are a little bit lower, right? So by the way, I'm wearing a farmer hat, and look at me, right? So I'm fairly unsophisticated, but if you go to the dashboard, there's this thing, right? So, you can lend USDC on Morpho to a vault providing liquidity to any eligible market to receive some yield. And there's also incentives to borrow. So my read on the situation here, I could be wrong, but, my unsophisticated take here is that if you use Morpho to borrow stablecoins, you'll also be retroactively rewarded with tokens. And the cool thing about this farm here is that right now, the majority of the yield is paid in the Morpho token. And if you look at the Morpho token, historically, I've been fairly bearish to Morpho token, but now that I'm farming it, I'm very, very bullish. Look at that chart. I think it's going to go to the moon. So 10% paid in roughly, right, in the Morpho token. And to my understanding, what this means is that when you deposit USDC into a Morpho vault, the manager of that specific vault decides which lending markets to put it in. Drip rewards are handed out at the market level, not the vault level. This means that you'll only earn incentives on the portion of your deposit that the manager actually places in eligible markets. What the fuck does that mean, right? The simple answer is, well, I actually don't know what this means. But if I had to guess, if you go to the Morpho, if you go to the Earn tab and then click on vaults, there are a bunch of these vaults where there's a curator, and Gauntlet, Steakhouse, these are onchain farmers, risk managers and whatnot, and you can lend your stablecoins out to them, and then they'll be using your stablecoins to farm on chain. So hypothetically, if the borrow rate is 3% and then they can earn 4% on the farm, then they'll be willing to borrow stablecoins up to 3.9. Basically, right, they're going to be borrowing your stablecoins, and then they'll be paying you a yield. Also, Morpho is also going to be paying you inflationary token incentives, as I've talked about. And I think what this means is that if you borrow on Morpho here, you'll get retroactively rewarded. And after a certain time period, if a portion of your stablecoins that you're lending out is being borrowed, then you'll also be rewarded with ARB tokens. So yes, right now the dashboard says 10.7%, but I think it's going to be a little bit higher than that because what for example, like if like all my stablecoins are borrowed, then I'm going to be capturing some of these incentives. I'll let you know though, maybe I'm wrong, and then people, the DeFi farmers out there are kind of it's like like this guy, he's just wearing this farmer hat, he's getting it all wrong. I might be getting it all wrong, but hey, right, like let me farm those gains. Where's it? Where'd it go? All right, so that's going to be on Arbitrum, and I think that's going to go on for like roughly 20 weeks. So hey, if you have some stable coins, you've been taking some profits like I have been in the crypto markets, I think this could be a pretty interesting place to park your capital, and you can probably support 6 to 7 figures of size, no problem. So the third farm I'm in is LLP on Lighter. I have roughly $250,000 in here, and I guess in the past couple of days, I made roughly 120, 30-ish dollars. And you can kind of see like my balance go up and down. So let me kind of go over what this thing is. So first of all, Lighter is a competitor to Hyperliquid. It's one of the fastest growing perpetual exchanges out there. It is invite only, but I do have some ref links for people in the description. Historically, I don't like to do ref links on this channel, but the last time I did a ref link for like a perp dex was Hyperliquid over two years ago, and people said that this kind of changed their life. So hey, it's it's buyer beware, right? But if you look at Hyperliquid versus Lighter, the volume, it's been fairly close. There is a lot of wash trading given there is a points program. I think what's more telling is the open interest, which is roughly 20% of Hyperliquid. Now, will Lighter open at 20% of the FDV of Hyperliquid? Probably not. I would expect on it to launch lower. However, right, it is a good platform. People are using it. It is growing pretty fast. And the Hyperliquid maxis, right, the cult is very strong there. But if you're a farmer, if you're pretty agnostic to these opportunities from a yield perspective, I do think it could be worthwhile to at least test out Lighter as a DEX. Now, for me, I'm not advocating people to trade on Lighter, right? You can if you want to. That's not really what I'm advocating for. My approach is being in this LLP. Basically, right, a perp dex is a place for people to trade leverage and to basically provide liquidity for all these degens. There's like this LLP vault that acts as the counterparty, right? It also market makes on the platform. So whatever money that the platform makes, it's kind of democratizing market making in a sense. So this APR could be misleading because it does take into account past returns and doesn't take into account future returns, right? Obviously. So yes, like it has made a lot of money in the past, but will it make a lot of money in the future? Probably not. But from my perspective, as long as we are pre-token for Lighter, there's gonna be a lot of people farming volume and farming activity on Lighter, more unsophisticated capital, and I would expect more like most retail traders to lose money trading perps. So I'll just take the other side. So if you're trading on Lighter, you're farming points. If you're farming LLP, you're farming the farmers. Is kind of how I view it. Of course, once they TGE, right, token generation event, I might pull out, but for the next couple of months before they TGE, I'm just going to park some capital in here because the returns have been fairly impressive. Of course, this is not a zero risk, right? That's why the APR is so high. If this thing had zero risk, then the APR should be lower. But there's this stat. I'll link this in the description below. There's like this LLP dashboard, like performance dashboard, and generally, it has been profitable almost every single month, right? Not every day. So, for example, yesterday it was kind of down 0.15%. For the month of August, it looked like this. So some days they win a lot, some days they lose some. But if I'm planning to be in this farm for the next few months, it's more so of like a time in the markets beating time in the markets is kind of how I view it. And for me, right, I've been fairly super long crypto recently, or I guess like the past few years. Recently, I've taken a lot of profits because I feel like the risk reward of owning crypto relative to like the risk reward of just like farming these things, like dumping the tokens. I feel like there's an alternative, right? So that's kind of been my approach with markets when I thought when I thought that crypto provided asymmetric opportunities. I was like max long. Now I'm less sure where we are in the cycle. I could be completely wrong, right? I've been wrong many times before, So, but for me, it's like, why would I hold a shit ton of ETH or something, right? When I can at least park capital here that might average like maybe 40 to 50% gains over the next couple of months. I don't know, it feels fairly comfy to me. And from my perspective, I can always buy back in if I want to. So for the time being, the market provides these opportunities. I'm going to be a humble farmer, capitalize on these opportunities, dump these tokens, and then live to see another day. So that's going to be it for me. That's how I'm farming with $500,000 on chain. Let me know if you like the content, and I'll see you guys another time. Bye-bye.